Okay, welcome back to our channel, MegaWhale team. Thanks for tuning into a video today. Today's video, we're going to be taking a look at the total cryptocurrency market cap as well as the Bitcoin chart to try to give you guys an opinion and estimation of where we think the price will be heading in the short term. There's a lot going on, so let's dive right in. To start off, we're going to be taking a look at the total cryptocurrency market cap. There's a few things we've noticed on this chart, and we did tell you guys at the top over here that 2.14 trillion was a major zone of resistance. If we flipped the 2.14 trillion, it was very likely Bitcoin was actually going to flip back above this gray resistance zone and push over 48k and officially send us back into an uptrend. That would be an overall market uptrend. Unfortunately, as expected, we got rejected and we went back down to the 1.925 trillion support level, which we actually ended up losing in the last few days. I do want to point out a few things here. There's a few different ways we can actually put our support and resistance lines, both of which give us slightly different, I would say, results, and it's a little too soon to tell which one is actually correct. So the first one, of course, is we're in an ascending channel. Now, an ascending channel is a bearish formation. It is when we have the price converging in an uptrend with the two upward trending lines converging as the distance goes along. So we're seeing here, this is our ascending wedge. It is a bearish formation, which results in a strong downwards break. We had our downwards break, we pushed up, we found rejection, and we continued downwards. At the point of rejection, it was a confirmation that Bitcoin was going to continue downwards. Once that rejection occurred, Bitcoin actually had a pretty significant push downwards once again over here. There was no coincidence that we rejected at the top of that $41,300 resistance level, just at the top of its resistance range, plummeting back down and finding support at 39,500. We're going to come back and talk about this chart in a little bit. We're going to just go back to total cryptocurrency market cap because there's a few other things I do want to point out. So first and foremost, assuming this is in fact what is happening and we are in an ascending wedge and we just broke out and rejected from the ascending wedge, the measured move distance of this is pretty significant. All right, guys, so we take our first touch and our entry point into the wedge, which is here. We can apply this distance to the chart, of course, at our breakout point. And it's telling us we're going to head much lower, guys. So this will send us down to 1.4 trillion. Of course, this bleed out will be a slow bleed out if it happens. I expect the first support range to be around this level here. And of course, if we go lower, we will head down to that level, that 1.4 trillion. This is worst case scenario. This is the bearish scenario. This is what will happen in an absolute worst case scenario if the market continues downwards. Relating that to a Bitcoin chart, if that does occur, what can we expect to see for Bitcoin? Well, of course, we will be losing this ascending channel formation. We will be losing the $39,000 support. We'll be losing the $38,000 support, and we will be continuing downwards to probably around $32,000 to $30,000. All right, so that is what will happen if we see some sort of play out on the total cryptocurrency market cap. We expect that to occur on Bitcoin, similar to this. The other scenario is a bullish scenario. Now, moving back to the daily on the cryptocurrency total market cap, we can actually draw an ascending trend line from the 24th of July bottom, retesting the recent price drop on the 11th of April, and that would mean we're in a more of an ascending channel formation. Now, an ascending channel formation is more bullish. It results in a few bullish swings upwards, but again, ultimately, it does result in a drop downwards to a downtrend. So the question is not, are we going to move into an uptrend overall on a macro scale? The question is, when are we going to drop? Are we going to see another push upwards? Are we going to see the total cryptocurrency market cap maybe rise and then fall down? Or are we just going to bleed downwards from here? It's a little bit too soon to tell on the total cryptocurrency market cap, but that is where we're going to push over to the Bitcoin chart, and we can kind of figure out exactly how that's going to happen on the Bitcoin chart more clear. So now that we're taking a look at the total cryptocurrency market cap chart, and we've kind of given us overall market directions, we can kind of analyze this Bitcoin chart with a little bit more proficiency. So right now we are still in an ascending channel formation. We've been in this ascending channel formation for basically the entire year, since the 6th of January. It's been a choppy year, guys. It's been up and down, up and down. We haven't really moved that much. We are down for the year at the moment. Our yearly open was at around 54K. So we are down 12% on Bitcoin chart for the year, but of course it's fluctuated quite a fair amount in that few months. It's been quite choppy compared to the rest of Bitcoin's chart. Even at these highs, this is very, very choppy, and a lot of people would have been shaken out, or a lot of people just would have lost a lot of money by now. So if you're still in the market and you're in your USDT or your stable coins and you've followed our advice, which is just to hold and just scalp trade until the market turns, you know, you're in a really good position. So congratulations. For everyone who's not, you know, don't ignore what's happened, but try and move forward from here from a more objective standpoint and use objective analysis to base your decisions. Just because you have lost in the past and you're down, it doesn't give you a reason to continue to emotionally trade and continue to damage your portfolio. If anything, this is a time to reevaluate your decisions, assess what went wrong, and now put a plan in place so you can avoid these mistakes and profit in the future. So moving to Bitcoin's chart, we are an ascending channel. We have come down, and we warned you guys all the way up here at this retest. We warned you guys we're probably going to come down and retest the bottom of this channel. And in fact, we have seen that. So we predicted this entire drop, so congratulations. But we have come down and retested the bottom of this trend line. This dotted trend line is our $39,000 trend, and this gray box is the bottom of this gray box around 39,100. Recently retesting the bottom of that and bouncing a little bit. Now we bounced when the total cryptocurrency market cap went up. I'm going to zoom in a little bit. Went up, and remember we bounced at that same time that the total cryptocurrency market cap came up and rejected from this trend line. It is a pretty good confirmation that is a strong rejection point, and we are in an ascending wedge, because if we were not in an ascending wedge, it's a pretty high chance we would have cleared this level as we cleared this local high here. We would have flipped that level and we would have probably continued upwards to this resistance. The fact that we did not do that is a pretty strong indication that this trend line here is in fact an ascending wedge resistance now. So moving to the Bitcoin chart, we saw a pretty significant drop from that level. I'm going to go to the hourly time frame to show you guys. So we saw a pretty nasty rejection here, pushing us all the way back down to this level here. Now, we have two scenarios at play. We're going to talk about this descending trend line in just a second, but I want to focus your attention on the microstructure of this right here. First and foremost, we have a possible, now both of these are bearish, unfortunately. We have an ascending broadening wedge. Now an ascending broadening wedge is a lesser of the two when it comes to bearish targets. How you make a target on an ascending broadening wedge is you'll draw a horizontal line from the absolute low of the first retest, and that will be your price target when this level breaks. All right, so the ascending broadening wedge is telling us we will retest $39,000 again. And our second option here, guys, is in fact an ascending channel. Now the ascending channel with two liquidity grabs over here and over here, of course finding support again here, indicating that this is in fact an ascending channel support, is indicating that we are pushing back upwards to this level, potentially higher one last time before we get rejected and continue downwards. All right, for now I am very much optimistic on this short-term rally. I will be looking at taking some entries on altcoins. I'll be posting these in my VIP soon. So if you're not a part of the VIP channel, link in the description. Contact us on Telegram. You can join our VIP and get access to all our altcoin trade signals. We do spot trades without leverage, and we have pretty significant profits. So with that being said, looking for some entries, and then we'll be closing those entries when the price drops below this level once again. You could easily get a few scalps as the price rises here if it does. And obviously that top target of around $42,000 would be a potential swing point where we look for a close and the price to continue downwards. So our theory right now, guys, if you haven't catched the video, is the macro is still very bearish. The macro is still pointing downwards, but we have these short-term indications of potential price fluctuations and potentially the price going back upwards. All right, so on the short term, we can definitely see a rally to 42K. We're going to dive into the technicals in just a little bit to assess the strength of this move. But overall, short-term rally is possible to 42K, but ultimately I do believe we'll be crashing down to retest at 38,000, potentially even lower pretty soon. So let's address this trend line. This trend line has basically enacted a pretty strong resistance this entire way down. We did fake out above this level here, only to drop back down, and we have retested and now finally broken out of this trend line once again. All right, the second break is probably going to be the break that defines this move upwards and will be the one that we're kind of more interested in. It was very obvious this was in fact a fake out because we had a look at that total cryptocurrency market cap and we had that rejection. If we see this 4-hour candle here, I'm going to zoom in actually. Here, 1 second to load. If we see this candle here, this 2-hour candle here, it was a very, very telling sign that we were actually going to fake out. As soon as we lost this level again, it was very obvious, you know, we're faking out. And in fact, we didn't actually lose this line for a few hours after. If we look in over here, this was at this point here. So it was very obvious that this was going to crash hard and Bitcoin was going to crash hard as well. So that was quite obvious to foresee. So let's take a look at some of the technicals. We're going to start on the daily, of course, and then zoom inwards and look at the small time frame. Starting with Ichimoku cloud, we are retesting the bottom of this cloud, which is nice to see, a potential bit of support. If we look at the lagging span, which I'm going to do is bring that one to black, we can see the lagging span is currently just pushing through the red clouds. So we haven't lost all momentum here. It's found support on the baseline and conversion line, indicating we're potentially going to be pushing upwards here, which is nice to see. So the Ichimoku cloud is looking more in favor of the bullish scenario upwards to around 41,300 to 42,000 than it is indicating that we continue downwards directly from here. The bull market support band is of course indicating we are downwards, but like I said many times before, we can't use the bull market support band for entries and exit from trades. All it really tells us is the overall direction of the strength of the momentum of the trade, of the market, should I say. So using this and saying just because we're underneath the bull market support band means it is not a buy, that is not always necessarily the case. When the price is in fact over bull market support band or breaking through that bull market support band, we can use that as a buying signal though. But right now it is suggesting that we are in a downtrend still, so we do have to be cautious and optimistic at the same time. Don't overextend positions and be aware of these downside risks, because just because we break this short-term downward trend, it does not mean we're pushing up to 42K. As was stated previously in the video, there are many scenarios that we can just push downwards from here and just crash below that 39,000 support. And below that 39,000 support, guys, if we just take a look at the Bitcoin chart here, there's not much, all right? There's really not that much support or if any demand at all down here. So, you know, we don't have a lot of price data over here. The VPVR doesn't show a lot of price action. So if we lose that 39,000, there is a pretty high chance we just tank it, absolutely tank it downwards over here before finding support again, like we did on the last two occasions. I mentioned briefly in a video, I think 3 or 4 days ago, that I do believe if we lose the $39,000 level, I don't believe we will reclaim it. And we've had a few instances here, like I'm pointing out over here and even here, where we've retested at 39,000 and managed to hold above it. But I believe if we break this $39,000 level again, I do not believe we will be holding this level. I think we will fall below, and I do not think we'll come back up to retest it. I think we'll see either something like that or something like this. So be cautious, guys. Don't jump right in. Trade with small amounts until the trend is bullish. So let's do an update on that. Let's take a look at the 200-day moving average. The 200-day moving average is converging closer and closer to 48K. And like we've said many times, we're not bullish on the macro until 48K is broken. All right, we'll be bullish on the macro as soon as that flips, as soon as we close a daily candle above, all green lights on, invest with larger amounts of your portfolio, be more aggressive, have lighter stop losses, and expect higher profits. Until then, conservative investing, scalp trading with a small amount of profit, being cautious, taking profits when you're at profit. This is how you make money. This is how you prevent huge losses. And this is how you enable yourself to be in a position to take advantage of these huge bull markets we have in cryptocurrency. A lot of people just get wrecked in the bear market and they're unable to capitalize on these bull markets. If at best they make all the money back they lost in the bear market, in the bull market, and the cycle just repeats and repeats and repeats. Okay, so what else we're going to look at? Of course, one of my favorite indicators, the Gaussian channel, and we got rejected on the midline of the Gaussian channel here, which is definitely not a great thing to see. We've seen similar rejections on the midline of the Gaussian channel after breaking through it, and very similar to this area here, guys. I'm not a fan of fractals at all. I hate fractals, in fact, but we can see a very good similarity here. We broke through the Gaussian channel, we pushed down, rejected off the midline, and this huge area of volatility in the next few candles after, with these huge pushes upwards and downwards. In fact, pretty interesting, this one found a lot of support at 42,000 guys. So this might be an inverted version of that. We can push up to 42,000, push back downwards, but ultimately we ended up losing that Gaussian channel once again, dropping below it, retesting the support zone. Very high chance we're coming down to 48k all in all. All right, so 48k is our short-term target. I think, what are the chances of us reaching 48k over 42k? I would say they're very similar. I would say we're very much on the fence here. I'm leaning more towards we're touching 38k first before we push upwards, and then if we lose that 39k, we're losing that 39k permanently and continuing downwards. I think I'm leaning more towards that scenario, but like I said, I'm willing to take some risk here. I'm willing to enter some altcoins. I'm willing to have tight stop losses for potential move upwards to 42k first before we crash back down inevitably and lose 39k and go into an extended, or should I say, the next leg of this downward cycle. So guys, I hope the video today was somewhat of help. We're not really going to analyze a short-term time frame too much today. What we're going to do just to end the video is take a look at some of the momentum indicators on the short term. So we'll take a look at the MACD, we'll bring up the RSI, and we'll just finish it off with this and just see if we can kind of, you know, pinpoint anything really that can signify a potential trend reversal. Of course, straight away standing out to me is this trend line has been broken. We initially broke the trend line at this push up over here, which we did actually tell you guys about, retesting this trend line here. It'll be interesting to see what happens next. If we can clear that local high, I'm going to draw a trend line on here. Clearing that local high here would indicate the leg upwards to 42k. All right, so keep an eye on that 4 hour, keep an eye on the 51.50 on the RSI. If we clear the 51.50 on the RSI, we can definitely expect a push upwards to 42k. I think until then, remain cautious. Until then, if you are going to trade with a very, very small amount. All right, if we clear the 51.5 on the RSI in 4 hours, you can be a little bit more aggressive, but still cautious on your investments, on your entries, because we were more likely to see a push to 42k once the 51.5 has been cleared. If we do not clear the 51.5, the more likely scenario is that we drop downwards to that $39,000 to $38,000 zone first. All right, guys. Just going to reiterate that point one more time, just so everyone is very, very crystal clear. If we break 51.50 on the RSI, we are more likely to head to $42,000 first. If we do not break 51.50 on the RSI, we are more likely to head to $39,000 to $38,000 first. All right, guys, be safe, take care. Remember to like, comment, and subscribe. Follow us on Twitter, Telegram. Join our new announcement channel for our newly launched Crypto Academy channel. We basically launched a Become a Trader course. If you're interested in learning how to trade, we have developed a premium trading course with 470 pages of information, all handpicked topics explained with comprehensive examples to expand your knowledge on everything from trading concepts, risk management, market analysis, and even we do tutorials on how to manage your taxes. So we show you how to design and implement an effective recording strategy on Excel. We'll show you how to do all the mathematical equations in Excel, so it's all automated, all easy, click of a button. We also have 85 detailed videos where we expand on information learned from these 470 slides. We give you real charting examples, similar to the videos we see on YouTube here, just a lot more detailed. We also do worksheets, quizzes, trading journals, all of the above. It's probably the most detailed and advanced cryptocurrency technical analysis course you'll ever find, and it's taken myself and Wolves of Crypto months. It's taken us ages, guys, to prepare. We've been working 5 hours a day on this for the last 6 months. So if you're interested in that, link in the description. Come join along, inquire, send us an email, and we can get you in. With that being said, I will catch you all in the next video.